Good morning, I'm Maiki Oreta and you're watching Business 360, where we break down the numbers, connect the dots, and give you the developments and the insights you need to navigate, adapt, and lead. Let's dive right in. Philippine investment pledges plunge in Q2, a sharp reversal from last year's strong performance. Government sets aside 275 billion pesos in 2026 to fund major flood control projects nationwide. And it isn't game over. Philippine officials still push for a better deal amid President Trump's sweeping U.S. tariffs. Let's check out how global financial markets moved overnight. Wall Street barely moved after a hotter than expected producer prices report cooled hopes for near-term rate cuts. The Labor Department said July's producer prices rose at the fastest pace in 3 years, driven by higher costs for goods and services, signaling broader inflation pressures. Data from LSEG shows traders trimmed their Federal Reserve rate cut expectations for the rest of the year to about 56.7 basis points, down from around 63 basis points through a quarter-point cut in September, though rather a quarter-point cut in September is still fully priced in.
The markets today got a little bit of a surprise, didn't they? We had the PPI number come in pretty hot. If you looked at it on a month-over-month basis, it was kind of shocking at 0.9%. But even on a year-over-year basis, 3.3 for PPI was well above what people were looking for.
U.S. stocks closed virtually unchanged, with the Dow and the Nasdaq edging lower, while the S&P 500 posted a very slight gain. Over in Europe, the stocks there rose. London's FTSE gained 0.1%, Germany's DAX higher by 0.8%, and France's CAC 40 higher by 0.8% as well. Here at home, investment pledges from both foreign and Filipino nationals plunged in the second quarter, which is a sharp reversal from last year's strong numbers. Approvals across key industries, from manufacturing to infrastructure, posted double-digit declines. Philippine Statistics Authority data shows approved investments totaled 300 billion pesos in Q2 2025, nearly 420 billion pesos less than the 720.1 billion reported a year ago. The drop highlights cooler investor sentiment and a slower pace of big-ticket project approvals, a trend that could weigh on job creation and economic growth. With floods hitting harder and more often, the government is pouring 275 billion pesos into flood control next year, one of its biggest spending pushes yet. The lion's share, over 272 billion, goes to the Public Works Department, while nearly 2.6 billion is for the Metropolitan Manila Development Authority, or the MMDA. Budget Chief Amena Pangandaman says the projects were proposed by the agencies and underwent proper planning. She adds that feasibility studies back the funding, which is part of the 2026 National Expenditure Plan. With flood control long plagued by delays and corruption allegations, officials face pressure to make every peso count, turning budgets into real working projects that protect communities and the economy. From flood control to the wider spending plan, Budget Secretary Amena Pangandaman wants to cap unprogrammed appropriations at no more than 5% of the national budget. Speaking at the Kapihan sa Manila Bay, she said that the International Monetary Fund recommends keeping such funds at that level, a point she first raised with the IMF 3 years ago, when she warned about growing budget allocations without clear project details. On Wednesday, the DVM submitted to Congress the proposed 6.79 trillion peso national budget for 2026. Unprogrammed appropriations are set at 249.9 billion pesos, or just over 3% of the proposal, down nearly 69% from this year's level. It's part of a push for stronger fiscal discipline, reining in wasteful or questionable spending while keeping debt sustainable and signaling stability to investors. After seeing firsthand the cost of botched infrastructure, President Ferdinand Marcos Jr. is cracking down on ordering the blacklisting of contractors behind failed or delayed projects. The move follows his inspection of stalled flood control works in Iloilo last Wednesday, including the unfinished Aganan flyover in Pavia under construction since 2019. The Presidential Communications Office says the project hit design and foundation problems, requiring costly jet routing, but repair funds taken from the completion budget are still short. The contractor, IBC International Builders Corporation, is also behind the troubled Ungka flyover in Iloilo City, temporarily closed due to structural issues. The PCO notes that the delays have intensified traffic woes and caused major inconvenience to motorists. Marcos says blacklisting is just the beginning, vowing stricter oversight to make sure public works are safe, on time, and worth every peso spent. From infrastructure oversight to international relations, President Bongbong Marcos and South Korean President Lee Jae-myung have reaffirmed their strong strategic partnership between their countries. During a phone conversation, the two leaders pledged closer cooperation in trade, defense, and cultural exchanges. PBBM also extended his warm congratulations and expressed full support for President Lee's administration, while thanking South Korea for its continued support for the Philippines' development and advocacies. Marcos underscored the need for sustained international backing for the Philippines' maritime interests and for regional stability in line with international law, calling the Philippine-South Korea alliance a crucial pillar of peace and security in the Indo-Pacific. With rice prices still a major driver of inflation, the government is keeping the maximum suggested retail price on imported rice, even as a 2-month import ban takes effect this September. Officials say the move is meant to protect local farmers who are selling palay at rock-bottom prices, as low as 8 pesos per kilo. The ban, ordered by President Ferdinand Marcos Jr., may be shortened or extended depending on harvest output and market trends. Specialty rice varieties will be exempt, with authorities vowing to closely monitor supply and pricing behavior. The Agriculture Department says it's ready to adjust policies to strike a balance, making sure farmers earn fairly while consumers are shielded from price spikes, a key part of the government's drive to keep rice affordable and the food supply secure. With authorities stepping up the fight against illegal online gambling, e-wallet giants GCash and Maya say that they will comply with a Bangko Sentral ng Pilipinas order to cut ties with gambling sites. In a statement, GCash said it will remove links and icons connecting payment apps to online gambling platforms as soon as it receives the official directive. Maya, for its part, says that it will implement the necessary updates and assured customers that their accounts and transactions remain secure and fully operational. At a Senate Committee on Games and Amusement hearing on Thursday, BSP Deputy Governor Mamerto Tangonan said e-wallets have 48 hours to unlink from online gambling platforms. The move is part of a wider government crackdown on illegal online gambling aimed at curbing money laundering risks and protecting consumers. The Philippines has some of the highest electricity rates in Asia. That affects everything from the cost of running a business to the price of goods we buy. A big offshore wind project in Ilocos Norte just cleared a major hurdle to connecting the national grid, a step that could add enough clean energy to power millions of homes. But the big question is, will projects like this help lower our bills, or will consumers just end up paying more for the infrastructure? Joining us now is Pete Ilagan, the president of NASACOR and former DOE undersecretary, to help us understand what this means for our power supply, our rates, and our future energy security. Hi, sir. Thank you for being with us this morning.
Good morning, Maiki, and good morning to all your listeners and viewers.
Okay.
Thank you for having me here.
Yeah, okay. Let's frame this discussion. It can get pretty technical. Let's talk about it through 3 lenses: the benefits of this project, the readiness of the grid to support it, and ultimately what it could mean for our electricity prices. But first, sir, before we talk about this massive project, let's understand our current situation. In the second half, August 2025, do we have enough electricity to meet the country's needs?
Well, at the moment, we can barely say we have just enough power but we have to be sure margin that a couple of plant outages or transmission issues will easily cause alerts. So uh, we really need to strengthen, increase our power supply to address the growing demand in the country.
Yeah. How thin is the reserve margin right now, sir?
Well, in Luzon, siguro about meron tayong margin ng mga 1,000 and in Mindanao a few hundreds. In Visayas, we are deficit. So, kinocompensate lang ito ng margin natin sa Luzon and Mindanao.
So we're working on generating new sources of electricity. The NGCP just approved Buhawin's study. This is a paper win for all intents and purposes, but it's still an important milestone. Why is this important, sir? Can you highlight that for us? For those that aren't in the energy sector, what does this paper win mean?
Well, this is a welcome development because this is a step toward that our power supply is sufficient to meet the growing demand in the country to avoid power outages, which will have an adverse impact in our economy and will discourage our investors in coming in. So we really need to assure the consumers, the Filipino people, that we have enough supply of electricity, and that is exactly the mandate of the Electric Power Industry Reform Act, saying that we should ensure the reliable, stable, secured, and affordable supply of electricity. So that mandate is on the burden of the Department of Energy, on the shoulder of the Department of Energy.
Okay, so this is an offshore wind farm in Ilocos. Once completed, this 2,000 megawatt facility, will it produce affordable electricity or will we still be needing subsidies from the government?
Well, projectedly, alam naman natin na, or rather comparatively, alam natin that onshore wind farm and solar are cheaper than offshore wind farm. It's a lot costlier to construct an offshore wind farm. Number one, the ports must be ready to receive the huge turbines of the wind farm because these are bigger than the wings of the planes. So kailangan handa yung port dyan na tanggapin itong mga malalaki at may lagay muna dyan for installation dito sa ongoing construction ng wind farm. Kailangan handa talaga tayo at kailangan ding handa ang grid. The transmission lines must be ready to receive the power that will come from this. That's why it's very necessary that Burgos substation must be completed before or prior to the completion and commercialization of the capacity coming from the Buhawi wind farm.
Yeah. Once we create the capacity in these massive facilities, sir, we need the pipes. We need to be able to transmit that power. Port readiness is really important because without it, it's useless. Where are we in port readiness and are the timelines aligning? So we've got Buhawin, which needs to come online. We've got the green light for that. But at the same time, we need the Burgos substation. We need the transmission infrastructure for this. Where are we there, sir?
Well, I really have no data or information on the Burgos substation, but we know that this is a 500 kilovolt substation that is meant to receive power from the offshore this Buhawin offshore wind project. It is meant to receive power from that so it can be delivered to the consumers.
Sir, remind us. Yeah. What's the primary aim for this?
For us who are watching these developments, we can only expect that the NGCP will make ready this transmission line substation so that it can receive the power from the Buhawin farm energy to be delivered by these substation transmission lines to the distribution utilities that needs this power in supplying their captive customers.
Sir, can you remind us what's the primary aim here? Is it to cover future demand, to reduce our reliance on imported fossil fuels, or is it really to bring down rates for customers? What is the main goal here?
Well, if we really want the consumers to benefit from the coming in of the Buhawi wind farm power, number one is we should see to it that the grid will be ready. Next thing is that we should see to it that strict cost control will be in place and there will be transparency in competitive bidding if it's going to supply the captive market. Remember, Mikey, that there are two ways where Buhawin farm capacity can be delivered to the consumers. First is the true power supply agreement. In short, Buhawin farm should have a power supply agreement with distribution utilities. And since they have this big capacity, I think the first thing in their mind is to be able to enter a power supply contract with Meralco, which controls 75% of the sales in Luzon and 66% of the sales nationally. So the best market for plants like this will be Meralco. And if this is going to be sold to Meralco through a power supply agreement, then it will go through an application with the Energy Regulatory Commission where the assurance or safeguards will have to be ready through the deliberations and public hearings. Right now, with the new setup at the commission, with a new chairman and an addition of 2 consumers, we expect a rate review that will make consumers look forward to a better and effective way of ensuring just and reasonable rates. This can be strengthened by our appeal with the Supreme Court to declare as null and void the current performance-based regulation rate-making methodology, which passes on to consumers all the costs, including the requirement in raising capital for expansion. So that's one thing that we are seeing now with the reforms that the new set of commissioners at the ERC, we can expect reforms that would make rates more affordable to the consumers. So we're looking at 2 things here. First, the readiness of the grid in order for us to enjoy cleaner energy. And second, affordable cost to be established or set, fixed by the Energy Regulatory Commission if this is going to reach the customer through the power supply agreement. The other option for this Buhawin farm energy is for them to sell their electricity through the West M or wholesale electricity spot market. And that's why we need to have this readiness of the NGCP. Otherwise, we will remain vulnerably exposed to the volatile oil and coal prices in the world market. And that's the thing that we do not need right now.
Yeah. Apart from grid readiness for consumers, it's really all about price. When you take a look at Buhawin, this is an offshore wind farm in Ilocos. That's out in the water. That's very expensive. That's a very expensive source of power. Taking a look at the bigger picture, sir, given our geography and our cost sensitivity, what is the best form of clean, sustainable energy for the Philippines?
The type of energy that would be more acceptable to the consumers now is the solar and wind, onshore wind, because these are a lot cheaper. I know for a fact that the solar energy contracted with Meralco is only at 3 pesos per kilowatt hour, where the average price now of Meralco for August is more than 7 pesos. Yet the solar price is only 3 pesos. So the cost of the solar power is a lot more welcome and complies with the requirement of the law with that criteria of least cost supply.
Okay, so why the focus on the wind farm? Why this Buhawin, sir? How did that come into the equation, and why expensive offshore wind power?
Well, for one thing, we have this law encouraging the entry of renewable energy, and that there is already this agreement or law also that uh, that is mandating that we should be welcoming more source of energy which are renewable. And thus, the coming in of this offshore, although costly, is something that
It still
falls
fits
within
into
this
that as
mandate.
renewable. Okay, got it. Sir, if
Yes.
projects like the Buhawin are integrated efficiently, what could that mean for our energy mix, and what could power rates look like by 2030? Because that's the date when Buhawin is supposed to come online.
I like that word efficiently. It should be integrated. Its cost should be integrated efficiently, and uh, of course, it will have an impact. But if there will be a stringent cost measures and safeguards, we will be able to mitigate what we know about the cost of offshore wind power. So kailangan lang talaga dito masusing pag-review ng kanyang cost, alamin talaga yung construction cost niya, at nang ma-establish natin yung kanyang actual capital invested, which will be subject for recovery, especially the return. And there should always be a regular and timely review of the rates and also of the progress in the grid development. There should be timely and regular review nitong mga rate setting natin through audit, and there must be a timely progress report ng Department of Energy and NGCP on the progress, on the readiness of this grid on the incoming potential power sources.
Sir, it's 2025, yet around 60% of our energy still comes from imported fossil fuels. If we get Buhawin right, what would that mean for our power mix and for energy prices?
Well, it could compensate it will compensate against the volatile prices of the oil and coal in the world market. Yun lang ang magiging consolation natin. And that's why we question the recent approval by the Department of Energy on another coal plant, which will be again depending on the importation of fossil fuel or coal as a source of fuel. So malaking bagay itong approval ng renewable energy because it would make us less dependent on imported fossil fuel.
So you mentioned offshore wind farms are very expensive, but there are new technologies. There are bladeless wind farms. What about innovations like that to make this type of clean energy cheaper and perhaps maybe cost level at par with solar?
Truth of the matter is that we had this problem also when solar was introduced 10 years ago. It was so expensive, but as technology comes in, it makes the cost lower. That's why we now have this contract of Meralco with a solar firm at 3 pesos per kilowatt hour. When it started, it was in the range of 7 to 8 pesos. Now it's down to 3 pesos. Some are even offering it at less than 3 pesos.
Yeah.
So I hope we expect the same with the progress in technology. We can expect the cost of offshore wind power to be going down also.
And lastly, sir, what do you need from the triumvirate, the DOE, the ERC, and the NGCP? What do you need in order to make renewables a top priority, a top sustainable priority?
Again, we are calling on these three agencies, DOE, ARC, and NGCP, to put their act together. Kailangan talaga silang magkaisa at seryosohin itong mandato ng IPIRA na kailangang ensure rather, the reliable, stable, secured, and affordable supply of electricity. They must get their act together. There must be a unified direction so that consumers can look forward to a stable and affordable cost of electricity.
Yeah, so much collaboration between the agencies and between the infrastructure needed to make all of this happen. Thank you so much for your time, Sir Pete Ilagan of NASACOR.
Thank you also, Mikey. Magandang umaga sa ating lahat.
All right, thank you, sir. All right, we're taking a quick break. Please stay with us as we dive deep into the numbers and the narratives that matter most, your bottom line. Welcome back. Let's check on Asian markets. Hold on a second. Bring it up. Okay, Asian markets are in the green, or they're looking mixed right now. The Nikkei 225 is higher by 0.8%. Hong Kong's Hang Seng Index lower by 1%, and Shanghai's Composite up by 0.3%, and Singapore's Straits Times lower by 0.6%. Now, over in the United States, investors were blindsided by July's hot PPI, that reading that's cooling hopes for near-term rate cuts, and that's affecting everybody, even us. Yesterday, Philippine shares finished lower Thursday as concerns over the country's fiscal outlook weighed on sentiment, with some investors also locking in recent gains. PSCI slipped 0.5%, down 33 points to 62.92. Market watchers cite forecasts that government debt could swell to a record 19.1 trillion pesos by end 2026, lifting the debt to GDP ratio above the 60% level many lenders consider prudent. Economic managers argue that the load remains manageable, backed by expected GDP growth to about 31.8 trillion. Value turnover slipped to 8.41 billion on 2.1 billion shares, with net foreign buying at 100 million pesos. Now, today, traders now see the final wave of second quarter earnings, rate cut signals from Wall Street, and the PSCI rebalancing effective August 18. Technically, support is seen at 62.50 and resistance between 63.50 and 6400. Taking a look at the main gauge right now, as of 10:35, that's in the red. I'm seeing a lot of red right now. Taking a look at our market figures, main gauge is down by 0.3%, back at the 6200 level to 62.73. All shares index in the red as well, down by 0.2% to 37.34. Financials, industrial, holding firms, property and mining and oil counters are in the red, with the mining and oil counter down the most, down by 1.2% in early trade. Only one bucking the downtrend is the services counter, which is up by 0.4%. Volume traded is at 332 million, valued at 1.74 billion pesos. Market breadth is bearish. We've got 84 decliners, 55 advancers, and 39 stocks unchanged. Taking a look at the currency markets, the peso opened weaker at 57.10 to the greenback, down from Thursday's close of 56.95. Now, a surprise U.S. tariff is set to strike the Philippines' top exports, sending shockwaves through local industries. Officials say the move is both unfair and unexpected, and they're scrambling to negotiate exemptions before jobs, factories, and trade figures take a big hit. Sujin Kim has the details.
I would say, to say the least, very disturbing.
This was how the Philippine ambassador to the U.S., Babe Romualdez, described the expected impact of the 100% tariff on semiconductor exports, the country's biggest export to America.
To be honest about it, we didn't expect this thing to be imposed this way. We expected something that would probably be a little more within the range that we felt was reasonable, but 100% is pretty, and a lot of companies, not only here in the Philippines, but all over the Asia-Pacific region will be very much affected by that.
Romualdez emphasized that the policy will not be easy to enforce and is already facing pushback in the United States itself.
Yeah, it's a global tariff that they're imposing, but I think there's a lot of semiconductor companies, especially the Semiconductor Association, that's quite powerful in Washington, D.C. They're lobbying that this tariff not be imposed.
A separate issue is the average 19% tariff on other products, already signed off by the White House, but still under negotiation for possible exemptions favoring the Philippines.
Once it's been announced by the White House, obviously it's final, but what is important is the details of that the tariff, and that's what we're working on right now. We're working on the details on what are the things that we'll be able to export exempted from the 19%. But these are still on the negotiating stage right now.
And on this matter, his position is clear.
We're confident that it's going to come out well for us.
Romualdez added that some U.S. Treasury officials have signaled the possibility of easing certain duties once trade surpluses and deficits are brought into balance. Soojin Kim, Bilyonaryo News Channel.
A top U.S. business mission lands in Manila, ready to turn talk into multi-billion peso deals. From chips to defense tech, American giants are betting on the Philippines as the next big strategic hub in Asia. Soojin Kim returns with this report.
They're here because they believe in the future of the Philippines.
More than 60 companies from the United States, mostly Fortune 500 giants in technology, defense, artificial intelligence, and infrastructure, are part of the largest ever business delegation to visit the Philippines under the U.S.-ASEAN Business Council.
U.S. private sector engagement is central to economic growth, bringing technologies, solutions, and long-term commitments that help build a secure, prosperous, and sustainable future for not only both our nations, but for this region. U.S. companies are committed to building relationships, ensuring transparency.
The Philippines story is a story of growth. The global growth is being driven by India and Southeast Asia. Philippine growth is among the highest in the region.
U.S. business leaders are looking at the Philippines' potential to advance in the semiconductor value chain, including higher value segments such as packaging, research, development, and design. The meetings also spotlighted policy improvements.
Their faith in the Philippines is boosted by a record of reform. The ease of doing business in this country has improved remarkably. The government's commitment to resolving problems is really unmatched in the region. Infrastructure improvements are real, and our companies see those benefits.
Beyond trade, discussions covered security-related projects such as ammunition production, military drones, and possible use of the Subic shipyard for Navy vessel construction, moves seen to bolster U.S. and Philippine presence in the region. The mission comes as the Marcos administration intensifies economic and security preparations for the country's ASEAN chairship next year. Soojin Kim, Bilyonaryo News Channel.
State-run land bank is making it easier for Filipinos to grow their savings while helping fund the country's development. It's offering convenient ways to invest in retail treasury bonds tranche 31 through the national government's bond exchange via the Bureau of Treasury. Launched August 5th under the theme RTV 31 for everyone, the peso-denominated 5-year bond offers a competitive annual interest rate paid quarterly. Now, proceeds will help fund key national priorities, including agriculture, infrastructure, education, and healthcare. The offering is part of a wider push to tap domestic savings, reducing reliance on foreign borrowing, while keeping investment returns circulating within our economy. On another front, Ayala Malls is pouring 12.7 billion pesos into Cebu, a big bet on Central Visayas' growing spending power. The listed property giant says that the investment will reimagine 3 key malls with upgrades rolling out between 2025 and 2028. The revamp covers Ayala Center Cebu, Ayala Mall's Central Block in Cebu IT Park, and Ayala Mall's Gatewalk in Mandaue. Ayala Land says that the move is part of a wider push to keep its retail spaces relevant and profitable in a fast-changing market, underscoring how developers are banking on strong regional consumer spending to drive growth. We're taking a short break. Business 360 will be right back. Welcome back. Family members of Senator Bongo are being linked to alleged irregularities in flood control projects in Davao del Sur. Records show 5 projects in the province were awarded to Alfredo Builders and Supply, owned by the senator's half-brother. According to the list on sumbungssapangulo.ph, all were completed in 2024, costing a total of over 326 million pesos. But a VNC check found that the district of Calinan, where most of the projects are located, still experiences frequent flooding. Alfredo Builders was first flagged in 2018, along with CLTG Builders, supposedly owned by the senator's father, for allegedly cornering billions in contracts in the Davao region. Both firms were named in plunder and graft complaints filed last year by former Senator Antonio Trillanes against Go and former President Rodrigo Duterte. The allegations add fuel to the wider debate on how public works funds are spent and whether projects deliver results on the ground. Now, bananas remain one of the Philippines' top agri-exports, but industry leaders warn that the country is losing its edge. Senator Amy Marcos is calling on the government to prioritize banana research and production to keep up with regional competitors. The president's sister raised concerns over the growing presence of rivals like Vietnam in key markets such as China and Japan. She says that the industry is grappling with high production costs and unfavorable trade agreements. Marcos is pushing for more free trade deals and greater government support, pointing out that Cavendish banana exports alone support over 300,000 jobs and 42 billion pesos in annual wages. She warns that without a stronger policy push, the Philippines risks losing not just market share, but a key driver of rural employment and agricultural growth. Now, we're going to be taking a quick break. Business 360 will be right back. Welcome back. A bomb threat sent police rushing to the Bangko Sentral ng Pilipinas headquarters in Manila Thursday. The Manila Police District's Explosives and Ordnance Division cordoned off the area and swept the building, but found no explosives. Authorities are now tracking down who made that threat. The BSP says operations continued uninterrupted and that there was no danger to staff or the public. Over in South America, Brazilian Congressman Eduardo Bolsonaro, son of former President Jair Bolsonaro, is warning of more U.S. sanctions as legal pressure mounts on his father. In an interview with Reuters, Bolsonaro said Brazil won't be able to negotiate lower U.S. tariffs on its exports without concessions from the Brazilian Supreme Court. President Trump has already imposed a 50% tariff on Brazilian goods and financial sanctions on the judge handling the case against the former president. The elder Bolsonaro is on trial over an alleged plot to overturn the 2022 election he lost.
If I do believe that more sanctions are coming against the Brazilian authorities, yes, I do believe, because Alexandre de Moraes is still doubling down. The last thing that he did is put Jair Bolsonaro under Rome arrest, house arrest. And President Trump is saying that it's very bad, it's very ugly, all the lawfare that Jair Bolsonaro, his family, and his supporters are suffering in Brazil.
The standoff is adding strain to U.S.-Brazil relations. It could threaten billions of dollars in trade between the two largest economies in the Americas. Now, in North America, California Governor Gavin Newsom wants voters this November to approve a plan redrawing the state's congressional map, creating 5 new Democratic seats. It's the latest salvo in redistricting battle with Republican-led Texas and President Donald Trump. Texas Republicans have already pushed through a new map aimed at flipping 5 Democratic seats in the 2026 midterms, with control of the U.S. House expected to be a nail-biter. At a rally in Los Angeles, Newsom said they must meet fire with fire, calling it a temporary strategy to counter what Democrats see as Republicans gaming the system.
We're here because Donald Trump, on January 6th, tried to light democracy on fire, tried to wreck this country. tried to steal an election, as Alex just said, by trying to dial in for 11, almost 12,000 votes. And here we are, in open and plain sight, before one vote is cast in the 2026 midterm election. And here he is once again trying to rig the system. He doesn't play by a different set of rules. He doesn't believe in the rules. And as a consequence, we need to disabuse ourselves of the way things have been done. It's not good enough to just hold hands, have a candlelight vigil, and talk about the way the world should be. We have got to recognize the cards that have been dealt. And we have got to meet fire with fire. And we've got to be held to a higher level of accountability. So that's what this is about. It's not complicated. We're doing this in reaction to a president of the United States that called a sitting governor of the state of Texas and said, find me 5 seats. We're doing it in reaction to that act. We're doing it mindful of our higher angels and better angels.
The move underscores how high the stakes are, with both parties maneuvering for every advantage in a battle that could tip control of Congress. And that's it for Business 360. I'm Maiki Oreta. Thank you for joining us, and keep it here on BNC, the Bilyonaryo News Channel.